Today I'm chatting with John Feneck. Last time we had John on, he gave us 3 stock picks, and today we're going to evaluate how those turned out. Just to give you a quick glimpse, one of those was Agnico, who put out earnings today, and they were fantastic. Also, John's going to give us a couple of the names that he likes right now at the time of recording, and we're going to talk about what we should be thinking about as mining investors when evaluating companies and how we should think about ETF investing. All right, everybody, enjoy the interview. John, thanks so much for joining us today.
Thanks for having me back, Steve.
So as we are recording, gold is flirting with all-time highs, $2,500. Now, something that I think that's really interesting about it is that hardly anybody's talking about it. You'd think flirting with all-time highs, hitting $2,500, social media would just be raging with gold bulls. I mean, Lord knows every time Bitcoin goes up, we can't see enough about it or hear enough about it on social media. But here gold is flirting with $2,500. Doesn't seem to be a whole lot of talk about it. Where do you think it can go, and what's your read on the market right now?
Yeah, I agree with you. There's a lot of distractions out there. Tech, obviously, big week for earnings. Microsoft, a bunch of names, and tech hasn't done too badly through this period of time. I will say, though, that if you look at technology as a sector since the market reopened after the Trump assassination attempt, we've seen a pretty bad market for tech for the last 13 trading days. And that might, as we look back, Steve, be the top, right? You just never know. I think September and October are going to be challenging months for something like tech, because historically the market, going back to the Great Depression, has not done well in September and October. So getting to your question about gold, look, we own physical gold. We own a lot of gold miners. I think the VIG right now really is in producing gold companies that can make a huge margin. If you look at Agnico's earnings just, last night, for example, their all-in sustaining cost per ounce, AISC, is under $1,200. Like Newmont just put a number over $1,550 about a week ago. So Agnico is really standing out to me as one of the leaders in the large cap producing space. And the stock is responding. It's trading a little frothy to us. The RSI is at 67 now. So, when we get to that 70 to 75 to 80 relative strength index, we start to get a little less interested.
Agnico. So let's talk a little bit about majors. We don't do enough of that on this show. What is it that allows them to have such a cheaper all-in sustaining cost than say like a Newmont?
I haven't dug really into the numbers from last night to give you a great answer on that, but Newmont had that merger with Newcrest, right? And so I think that didn't help their all-in sustaining cost. I still think Newmont's a great buy. If I didn't own so much GDX, which owns both of the stocks, I would be buying Newmont right here at 47, 48. But I think Agnico is just a more conservatively run company, and they do really focus on cost a lot. And I think that's really smart, because let's just round up, right? Let's say their all-in sustaining cost is $1,200. If you're at 2,400, right, you're literally your margins are insane. You can't go back even to 2011, 2012, when these stocks were really cranking, and see margins even close to that. Most people forget, or weren't invested then, that the margins on these stocks were maybe $200, $300, $400 an ounce. It's now $1,200 an ounce, or in the case of Newmont, it's $900 an ounce. It's amazing. So I think what's going to happen, and I could be wrong, is that in the fall, when we get a sector rotation away from momentum, away from growth and risk, people will be looking at stocks like Agnico and Newmont for that matter, that just posted 3 great quarters back to back to back in terms of free cash flow.
Do you think that now we're kind of at an inflection point? Just talking about market sentiment, we've started to see a bit of a rotation from the big tech, that say the Magnificent Seven, into small caps. And I know for years it kind of felt like it was no longer a stock picker's market because everybody's just playing the ETFs. But it looks like people are maybe kind of waking up now to hey, capital is going to flow out of those gigantic tech names and into other sectors. Do you think that this could be a great opportunity right now if you're looking at large cap gold producers?
Tremendous opportunity. Yeah. If you look at Newmont at 47, 48, it doesn't matter if you get it there or if you get it at 50 or 51, it's going to be worth, 65, 70 within 12 to 18 months in our view. Like it just will, because gold is going to continue to maintain its presence in this kind of uncertain environment, right? Like last year, gold hit 1900 and then it stayed there, if you remember, for about 5 months. And I'm talking like didn't close below 1900 forever. Like it was over 125 days, I'm sure of that, right? So like now the new floor is to me about 2300, right? So it hasn't really broken 2300 much in a few months. So a new floor is being created. I don't see us getting back to $2,000 gold. I think that we have a higher floor in place now. I think the same of silver. I think silver's got a new floor at 25 to 26. And if you get dips below that, we're going to be buying with both hands, because silver, since you and I last recorded, broke above that magic $30 an ounce number, which it hadn't done for 11 years.
So you mentioned silver. I am a huge silver bull right now. I think that, and I've gone on the record to say this, that $20 silver was a suicidal situation for a lot of CEOs in the silver industry. And I don't mean to make light of that, but it's scary when, like talking to some of these guys, they have thousands of employees and they are generating negative cash flow, and there's just not a lot of interest in mining. Then we turn the page here, and now we're trading closer to $30 an ounce silver. I know we're not quite there right now, but we have touched that.
Sure.
Do you think that silver is one of the more attractive opportunities right now?
Absolutely. And I had an 8% position in silver for most of 2023 in my portfolio. And I was on probably at least 12 to 15 podcasts like this saying that it wouldn't break 26. The reason being is twofold. One, I don't want to just talk my book. And secondly, we built those silver positions years ago, right? Like I bought a lot of silver in April and May of 2020 when it got smoked, and I just held it, right? So like I have to disclose to the public, hey, this is a position for me, right? But were we buying it hand over fist like last year? We didn't buy anything last year. We bought some this year at 24 and 25.01. Those were our two buys. And we did that because it seemed to be forming a floor, just like gold is doing right now at 2,300, right? If you look at silver going back 6 or 9 months ago, it was holding 22, then 23, then 24. And we were like, hey, this is the bottom's in. Like we watch the screen every day, unlike most traders. Or investors, I should say. So, we just felt more comfortable putting another position on there. But now I think if you get that opportunity to get back to 25 or 26, take it. Like days like last Thursday where you see silver down 5% pre-market, those are going to be gifts like longer term.
So let's review some of the positions that you brought up the last time that you were on here.
Yeah.
We talked about Agnico Eagle. You were bullish on that name, and I tip my hat to you. Since you were on here, the stock's up, I think, around 20% or so. At least the 1 month chart is, I think you might've been on 2 months ago, but it's definitely had a good run, great earnings. Then there was two other companies you mentioned. I think it was VR Resources and First Tellurium.
Tellurium.
Yeah. So if you can give us an update on those and sort of how you think that they performed since you were on.
Yeah, sure. So keeping on the silver theme first, I think I had mentioned a silver producer, Silver X, as well. That's been up a little bit, but I wanted to mention that in First Majestic first, because you and I were talking off camera about that. And I think it's important for your viewers to understand how stocks like this work, right? Because it can be very frustrating if you don't understand it. So the costs at both companies are quite high per ounce, right? Like First Majestic came out with earnings last night. Their all-in sustaining cost was around $21.60 an ounce, right? So not great in terms of all-in sustaining cost. However, you have to look where the market is going, right? And if you believe in $30 to $33 silver, $21.60 isn't bad, right? You're still making a lot of margin there. And these guys know what they're doing. They've been doing it a long time. I would argue that Silver X in Peru is really interesting because they're trying to figure out plata right now where they can either build a mill or, refurbish or I should say expand the existing mill. So they're going through that discussion literally in August, and we should know everything, by September. But I think that's what's holding some investors back is they don't want to see a huge CapEx, right? Which makes sense. But I think Jose's a great leader. He has 10 or 11% of the float himself. I love to see that in a CEO that has, the guts to put personal money in the market, not just, options. Yeah, I think highly of Peru. I think Peru's getting a bad rap. I mean, Castillo was jailed for 18 months. I think his term might be up now, but he's not coming back to rule Peru anytime soon. So I think you have a very benign situation there versus 2 years ago. And we love that as value managers. Getting to your question, First Tellurium has had tremendous news since we last talked. They got $29 million US from a company called Resolve, which has relationships with Apple, Tiffany, and some very large clients. So I liked the way they put the press release out because it basically said that I think about, they gave up 15% of their thermoelectric device for that $29 million contract, right? So they're holding 85% of it. And they pulled in a lot of cash, which means that they don't have to do any marketing and sales themselves, right? I love seeing that with juniors because it's a smart way to fund. It doesn't dilute you and I as shareholders, right? I think the share count is about 120 million out. Again, Ty, one of my screens is management owning shares, right? Ty owns 13% of the float himself. So he's got a lot of conviction in what's happening there. They're doing a presentation for the OTC today, so we'll see how that goes. But stock's gone from 7 cents to 9.5 cents now. I think it's going to go higher. I think tellurium is one of those critical minerals that people don't understand. 65% of tellurium is produced in China in 2023. So it's one of those things that, you have to have for solar panels and for other markets. It's not replaceable like some other metals are. And then VR Resources hasn't done well. VR RCF in the States. But I would say Mike Gunning, as a PhD, his geo is a really, really bright guy. They're going to figure it out. It's tough. It's tough drilling Nevada, right? You're going to have some hits and misses, and it's not cheap to drill there, but it is a wonderful jurisdiction. And Mike, like the other two CEOs I talked about, has a lot of skin in the game.
What about other positions that you're excited about right now? Are there any other names that right now you're buying or are particularly bullish and excited about?
Yeah. In the gold space, we started to buy Dakota Gold at 230, 235 a share, DC. It's actually, the chair is Robert Quartermain. Bob actually has two huge exits, as you probably know, at SSR Mining and Pretium. So whenever I see a guy like that, chairing a stock, I'm interested. They're on the New York Stock Exchange. Jonathan Ott is the CEO. He ran Gold Standard Ventures before that deal took place. And so Jonathan and Bob own about 15.9% of the float. Going back to that same theme of, don't tell me you like your stock unless, you're actually owning it. So they have 2.3 million ounces of gold in South Dakota. What's different about their stock is that they're on private land, which I love because they don't have to deal with the permitting issues. And if you look who's running South Dakota, they're very pro mining, right? So I think they get to 3 million ounces by January. I really do. And the stock is just trading like it's going out of business. There was some game playing in the stock because they were in GDXJ, and I think they got removed. I can't verify that, but it looks like from the trading they did. So, you look at those as opportunities. GDXJ at Feneck is a great product. However, it's got metrics and they don't bend on the metrics, right? They say you have to have a certain market cap, you've got to have a certain trading volume, et cetera. And if you don't meet all the criteria, you're not going to be in the product anymore.
A name that both of us are in right now is Golden Caribou. What's your thoughts on what's happening there with Frank Callahan?
Yeah, Frank Callahan came out of retirement for this. That's also a positive, right? Like when someone does that doesn't need to, who's independently wealthy, like, hey, well, why would you do this? He's got a passion for the gold business. And he's doing this project, Golden Caribou, very close to where his last exit was. If you look at his track record, his last exit was 10, 11 years ago, and he sold the company for 330 million Canadian. So that's a success, right, in mining. This one, they just put out holes 13, 14, and 15. And they have assays at the lab, I think dating back to hole 8 or 9. So they've got, call it, 7 holes coming here over the next, 4 to 6 weeks, maybe 8 weeks. So a stock like that really got bombed out, Steve, because they did a financing and They didn't raise what they wanted to raise right away. And they had a huge seller out there. I won't say which bank it was, but clearly they didn't coordinate with the company on the selling. And as you know, some of these stocks are illiquid, right? So it took the share price down to a point where they had to reprice the offering, and they just did that this week. So, I think it's a great opportunity here in a decent part of Canada with a proven track record and a good team in the field.
Do you think that when we talk about juniors, something that I think about a lot is whether or not there's enough alpha or potential there to make sense as a shareholder, right? Like, and I'm just talking about general mining, junior mining companies, right? Like if I'm looking at a company that's say trading at 10 cents and I know that there's going to be dilution to do more drilling in the future or more groundwork or pay employees, all that sort of stuff. The one concern that I have with a lot of the companies that are listed on the junior exchanges is that I should be, for the level of risk I'm taking, I should be able to look at that and say, I've got a shot at a 5 to 10x sort of return here. Do you think that when we look at the basket of, say, the thousands of companies that exist in the junior markets, that there's just too many names that don't offer that kind of potential, that are almost kind of like in a zombie status?
Yeah. I mean, I'm an advocate for the sector, you know that, but I agree with you. There's too many names right now. You're seeing some mergers of equals happen, like you saw last year. I guess equals is a poor word, but you know what I'm saying. Like similar synergies coming together to say, hey, if we combine our efforts, then we could get taken out by a major. But us, independent of each other, probably won't, right? So like, I see that with Millennial and with Integra last fall, right? They came together. I forget exactly when, but ITRG is the ticker on Integra. And I talked to Jason, for the CEO, for the first time this week, because they just did another deal with Florida Canyon, and Idaho is a great jurisdiction, right? It's ranked 8th globally. I think they're going to get that situation figured out, and I could be wrong. It's traded wonky for a while because they did a split as well. But yeah, to your point, you have to look under the hood of a junior, like a really small micro cap, and say, is this company a fly-by-night company? Is it going to be a lifestyle company? Like, what are they doing for marketing over the next 6 to 12 months? What are they doing for news flow? Some of these companies don't produce news for 2 to 3 months at a time. That really frustrates shareholders, right? So like, there's a number of different factors that go into the decision. But one of the things that I've made a lot of money with, Steve, is guys that come out of retirement or have like other exits that were really good. Like First Tellurium, Ty built a company. It took him about 10 years, but he built it from 4 million and exited at 175 million. Who knows what Frank Callahan put into the Golden Caribou, but let's say it's 10, 20, 30 million, and he exits for 330 million Canadian, right? Like, these are great opportunities, yet those are exceptions to the rule, to be fair, right? Like, junior mining is super risky. And so you have to buy a basket of stocks. And then if 2 or 3 out of 10 work, like, you're going to make a lot of money on a net basis.
I got to ask, I know that there was news about a short seller who got into a little bit of trouble last week. And we always hear these rumors online that short sellers are a big problem with the Canadian junior markets. What are your thoughts right now on the issues that exist for the Canadian junior markets to kind of get us out of this rut where, so many companies I talk to, they have just such a tremendously hard time raising money. And I understand that things have changed a lot over the years. We used to have, stockbrokers was something, I'm actually too young to remember that, but say in the 90s, my parents would have had a stockbroker who was telling them about hot stock tips. And now everybody uses discount brokerages. So, I mean, that's obviously a bit of a factor. Another factor might just be that things like crypto exist, or ETFs, for example. A lot of people just sort of place their money there. But then we also do have all these rumors about these sort of nasty groups that exist that basically short stocks. And this wasn't related to the short seller who got indicted last week, but these hedge funds, and I'm told that there's like 50 of them. I don't know how many there are, but they basically just short stocks with the hope of covering on a private placement. And they often have balance sheets that basically put them in a position where they can just get away with whatever they want. Do you think that this is a big problem for the Canadian junior markets?
It's a big problem. It's hard to identify because sometimes a company would have to pay extra money to look beyond like level two trading to see what exactly is happening, right? Like there's a couple cool websites that clients can look at, for free with a 15-minute delay to kind of see, okay, this was this bank selling or this was this institution selling or buying. But a lot of times, as you know, it comes back anonymous. And that is very frustrating for a CEO because you just don't know who is selling and you just want to communicate with them to say, hey, if you've got a block, let's try to figure this out. And I can line up some investors that want to take your shares as opposed to you just having some rookie blow it into the market, right? I think that's something to understand, Steve. Like I hear that from other CEOs, like in the junior market where, hey, I had a relationship with this guy at XYZ firm who's a 60-year-old guy like me, but now I got a 25-year-old who's coming in and he's just putting market orders out there, right? It happens. And so like, that's why we coach our clients to buy in tiers, right? We never say like some of these other writers who are out there, hey, we're going to buy once and sit back in our chair and we're just going to hold it, right? Like maybe twice. We buy like 6 to 10 times, honestly, on the way up because I can't get the entry point right. I'm not that smart. Like I want to be able to say if there's some rookie out there that's going to take this thing down 20% in a day because they're just impatient, right? Well, I'm going to have an order that probably would get filled maybe 6 to 8% away from the bid. Then I'm going to have my dream fill down here, down 15% from where the bid is. And if I'm telling you, it does get filled sometimes. Both orders will get filled. So I would encourage clients to think about that, right? The junior market is not efficient. It's got issues, and you just have to be able to be patient. Set a good till cancel order out here, way away from the action, so that if you got filled, you'd be happy, right? And then we have something closer to the action. But I would argue that like a guy like Terry Lynch at Power Nickel, PNPN in Canada, PNPNF in the States, that guy's doing a lot of pro bono work, right? I mean, he's really helping our industry to expose a lot of the players. A lot of them are in Canada that are basically just making, some of these stocks like look like they're trading like they're going out of business, his included, by the way. If you look at the stock last year, it was holding support in a pretty tight range. And it broke out this year because he was able to put out news and also do a lot of marketing at the same time to basically say to the market, hey, we have these, we're known as a nickel story, but now we have all these copper hits, right? And the market was getting hot for copper, as you know, and people just started to run for it. And then there were buyers like me coming on the back end of that saying, all right, now the stock's breaking out. And that's what happens, right? I mean, going back to that first Majestic story, AG was one of my top stories in 2016 when we were up 149%. Why? Because I talked to Keith pretty much on a every 2-month basis and just, checked in and just said, hey, things are looking ridiculous right now. What do you think? He's like, this is still super cheap, And so I kept checking myself. I do that a lot of times with CEOs because I don't have like the best, idea of where to exit a stock. Like some clients are the same way, right? Like you can make a good entry point, but then you want to be able to ride it long enough and you want to keep checking yourself. So we check our thesis a lot of times.
One last question while I got you on here. I know you're having an event in October of which we're hoping to attend. What can you tell us about your event?
Sure. It's going to be October 20th through the 22nd in Fort Lauderdale at the Four Seasons, which is right on the ocean front. Hotel's been open 2 years. It's the only 5-diamond resort in the metro area. We're really excited to host this, and we're going to feature 35 companies, not just gold and silver companies, but everything throughout the commodities complex, right? So we're going to have some oil companies there. We'll have some copper companies there, uranium companies. I think it's important to be diverse. And it allows all the companies, Steve, to shine, right? So if you're a gold company, you're not up against 25 other gold companies that are trying to compete for attention. There will be a website built literally by the time this goes live here in August, early August. But we have a one-pager right now, which maybe we can just put in the show notes for people to take a peek at. And if they want to register or learn more information, they're free to contact that email address or me directly.
Well, John, thanks very much for hopping on here. I appreciate you putting your neck on the chopping block and talking about companies that you think have a shot, and also holding yourself accountable when they don't work out so well. And hopefully you'll keep coming back on here in the future, and we can catch up at Beaver Creek in September.
Love to. Yeah, it's a great conference.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let us know what you think in the comment section. Thanks, everyone.